They raised $134 million 6 months after their TGE. He leaves. No one is using this chain. Situations like this suck on so many levels, man.
Welcome to another episode of Network Spotlight, the Mick and Mike edition. I'm Mick, that's Mike. If you look at what's happening in the markets right now, things are kind of a little bit shaky. A lot of that has to do everything that's happening between Russia, Ukraine, and also we're waiting for Jerome Powell to talk in a few days. And usually when that happens, the news that comes out is also a little bit shaky, but don't worry. We'll get you through everything. We'll give you the main pieces of news, why it matters to you, and what you should do about it. So let's get started. Welcome to the show. Mike, how you doing?
Good, man. How are you? How was the weekend?
Weekend was good. It was relaxing. And then, I was kind of anticipating the beginning of the week to be all like full of energy. And I'm looking around and energy is being taken out of the room for a little bit, at least in the short term. And there's a few things, right? Like people are talking about what does these institutions that are creating their own chains, like what does it mean for Ethereum? Founders that are raising millions of dollars and then they're just exiting. So we'll talk about that in terms of what Story Protocol is doing. So, and then also networks that are taking over other networks. So I first caught news of this when Sterling, who's also part of Network Spotlight, he is a key member of Blockchain Capital. He put out this tweet about that it is our responsibility to resist these types of people. They are here to extract. They contribute nothing. Bully them when they try to come back and do it again. So what is he mad about? Well, Jason Zhao, if I pronounce his name correctly, was a founder of Story Protocol, if I'm not mistaken, Mike. And after 3.5 years of building Story, he just decided to switch roles. He's going to be, I believe, a key advisor still. But this has a lot of people in the community, especially like on the VC side, irate about what's happening. What are your thoughts on this story?
First off, I want to preface everything. Like, I don't know what the kind of internal politics, I don't know what's happening behind closed doors at Story Protocol. And don't know, if this was kind of a founder struggle or whatnot, because, that happens a lot. But just taking the overall structure of the situation, I hate it. One of the things I hate most about the crypto industry is just, and also the venture capital industry too, right? Like overall, it just tells such a terrible story to founders who are like grinding out there, right? So let's take a look at the overall situation. Story Protocol is putting IP on the blockchain. Okay, I don't know if that's a good idea. A lot of people are like, why the hell does IP need a blockchain? Look, I think everything is going to get tokenized at some point in this world. Maybe is a good idea to put IP. I'm not here to judge that part. It could be a good idea, but they raised $134 million. Okay, and that's a massive amount, right? And look, he checks all the boxes. He's a Stanford comp sci guy. I think undergrad and grad. He worked at Google DeepMind. He's got this, perfect Silicon Valley background, right? What happens is, the Story Protocol has really only been around for 3.5 years. They TGE'd mid-February, so 6 months, almost to the day. I think he's like 2 days off. 6 months after their TGE, which you can clearly see that is his token vesting schedule that kicked in. He leaves. Okay. Now, what else is there? This is, they have a $1.8 billion market cap. Their fully diluted valuation is almost $6 billion. And I think they made something like $64 in fees daily. No one is using Story Protocol. And maybe that's okay for now, right? Like, it's very early. Yeah, you pull up the DeFi Llama chart. Uh, no one is using this. No one is using this chain, and he leaves probably a multimillionaire because his token vests. You know this was one of those I believe one of those TGEs that were high FDV, low float, and situations like this suck on so many levels, man. Like, look, I love tokens, right? I believe that tokens are this human coordination mechanism that has led to the creation of amazing products and protocols. But this is the part that like just is terrible. Is just it is so demoralizing for a lot of the VCs um, who are trying to like fund actually long-term projects. A lot of those founders who are just grinding, every day to build a valuable product. And then you see a founder kind of just cash out like this after uh 3.5 years. I hate seeing this stuff
And it happens pretty often. I mean, there's a lot of stories like this that don't necessarily make
very often.
the news because it's not necessarily a protocol that is like it's got so much attention. But I was talking to a friend of mine who is he runs a almost like a dev shop, but he's also a recruiter, hires a lot of technical talent, and he talks to a lot of teams that are just coming out of funding, and he's always asking them like, hey, okay, now you got this funding, like when are you planning on expanding? Like you mentioned that you wanted to raise because you're looking to hire these developers, and
Right.
nothing. Like they secure the funding and they don't ever have the intention of expanding. And so that made me realize that this happens way too often. But what is the solution, Mike? I mean, you're obviously on the VC side, you're
Yeah.
with Deep Ventures. This is something that I know you look at on a daily basis. I mean, what do you think is the is it more, is it as simple as just a better selection process, or should there be a different due diligence process involved in order to find founders that are like truly in it for the right reasons?
Here's the tough part because there are VCs that probably made a lot of money from Story Protocol, uh, right? Like from their TGE. So just some of the way these deals are structured, maybe there needs to be longer vesting schedules, right? So there's two sides to that. One, that is something that, yeah, one of the pros of being a VC in crypto is that there's this that you would get to liquidity earlier than a normal tech tech Web 2 fund, right? It takes sometimes a decade, 12, 15 years for those kinds of companies to either get acquired or go public with an IPO, and that liquidity is locked up the entire time. So it is a pro that because we invest primarily in projects with a token, we get our investments get liquid earlier. But you want to really find that balance of you know providing funding for projects that provide long term value and actually users and a product that users use. So it could be looking at the vesting schedules, or then that other side, it is looking at how uh, uh, you know doing due diligence on these founders, making sure that they're in it for the long haul. But really, I mean, I think for the another story that we're going to talk about, like economic incentives rule everything in crypto, and tokens, as much as we all believe in them being these economic incentives to us to incentivize, a community to contribute to a protocol. Maybe we're seeing the evil side of that with founders and VCs being able to cash out too early. It's a very difficult problem. I don't have all the answers right now.
There's a book that I read a while back about grit, and there was a study done that talked about how people that have graduated not so much from like prestigious schools, they just had their backs up against the wall. They tend to have more grit than people that have this like fancy, polished education. And I'm curious to know, in like in the world of VC, I mean, do you like how much emphasis do funds, like how much do they put on these teams that have the Harvard degree, the Stanford degree? Like how much of an emphasis is placed on that?
I think many VC venture funds place a lot of emphasis on that. And a lot of these venture funds are those that just likely can't come to conviction by themselves. So they look for social proof of they'll look for this. They essentially the founders that they back essentially look exactly like them, right? Gone to these prestigious uh, uh, universities, usually from wealthy backgrounds for the most part. So they essentially will fund people like that that they are familiar with that look like them, right? Uh, so a lot of VCs look at that. But to your point about grit, right? If you look at the typical equity based Web 2 world, startup world, you need it. If a company is failing, right, or just not doing well, like, and that founder needs that grit to work through all those problems and to get, essentially their equity to be worth something down the road. And again, that can take 8, 10, 12 years many times, right? But in crypto, if your vesting schedule, if you're vesting, if you start vesting after 3.5 years, you don't need grit to cash out, right? You just need to make it to that 3.5 years, and which in the life of a starter as is not that long, right? So like obviously you want grit, but when you want grit, but you want people who are like at least what we look for is people who are aligned for that long term roadmap for building things to advance the crypto industry instead of a fast cash out.
Yeah. Like you said, we don't know for sure what happened internally. This is all speculation that he just decided to willingly get up and leave. Maybe he was pushed out. Like we don't really know the details of that. But
You're
regardless,
right.
on the outside, it doesn't look great. You mentioned something earlier, Mike, about incentives, how they pretty much run the economy. This kind of brings us
Right.
to this story here with Qubic and
This is nuts.
what they're doing with what's that?
I said this is nuts.
This is pretty crazy.
Yeah.
It's unique. I want you to unpack the details, and then we can discuss what it means for just broader markets.
Yeah. So the all right. So we'll go into details. All right. So Qubic is this blockchain that was built to host a fully on-chain decentralized AI model called AI Garth, right? Or iGarth. I don't know how to pronounce it. But essentially, the chain was designed in this way to be able to utilize mining power for, just like proof of work, right? For other purposes outside of just simple hashing, like Bitcoin does, right? And they call this useful proof of work. So what they did in the early days, they split the chain's resources between training this on-chain on AI model called AI Garth and mining Monero, which is the private proof of work token. It's I believe by market the largest privacy coin, right? So their approach was like very very profitable, near almost 3 times more profitable than directly mining Monero, right? So they attracted a ton of new compute to their network. And so initially their model was to mine Monero, convert that Monero to USDT, and then use those proceeds to buy back and burn their native token, which is Qubic, thus increasing the price of Qubic. There's lower circulation out there, right? Then the community voted to only burn 50% of those that Qubic, and then use the rest of those proceeds from the sale of Monero to directly compensate Qubic's chain validators, right? There's a lot going on here, right? But like essentially, they were more directly compensating their validators for contributing their compute power. So what happened was this they were essentially economically incentivizing all of these miners validators to move away from other Monero mining pools into the Qubic mining pool. So what happened? Qubic had less than 2% of Monero's hash power in May, and just last week they had more than the 51% of hash power. So they were able to take over the network and do block reorgs. And what's the most fascinating thing about this is that like Qubic was only a $300 million market cap token, and Monero was at 6 billion at the time of the takeover. It's gone down a little bit since, right? So the, it's just this such an interesting, you talk about economic incentives, very interesting model of how, a relatively small network can essentially take over this larger network, much larger network.
Yeah, I mean,
Uh,
this is opening up a whole new chapter in how proof of work chains will be competing for miners. I mean, that's in a nutshell, like the biggest story coming out of this. And
yep,
personally, like I'm all for it because the industry rapidly evolves from a technological perspective, and therefore the incentives need to also adjust. And just like in the traditional world, if you believe in capitalism and competition and making each other better that way in order to provide the best product, I mean, essentially that's kind of what's happening here, right, Mike?
yeah, it's the equivalent of kind of like white hat hacking, right? They're kind of white hat economically hacking, and look, they didn't take over, they didn't like reorg any blocks. I don't believe, right? They said this is an experiment. They said they're not gonna like you know completely overtake Monero and do some reorgs and anything. But I think it's part of it is like, look, yeah, like you said, look at what can happen to your chain, right? If you align economic incentives, these chains are, yeah, and in very high market cap chains, like they can be taken over. So I agree with you, right? Like it's like in in public, because a lot of these are, all these chains are open source. It's like you're going to improve the chain. You're going to improve the security of the chain by running these quote unquote experiments, to economically hack these chains. And they're going to have to, figure out a way to improve that economic security. And it looks like they're now going to move towards Dogecoin to see if they can do something about that. Dogecoin is, has a larger market cap than Monero. And yeah, let's see what happens, right? And look, obviously there's a lot of risk because the number one OG chain, Bitcoin, is is proof of work, and yeah, there's obviously a ton to lose if there's something that can be figured out to be able to take over that chain. But obviously much more, much higher market cap than the other ones, than Monero.
Kind of is this whole like incentives versus loyalty, like how loyal are you going to be to a chain, to what extent? So I think Dogecoin would be an interesting test. But
Yep.
if they take down Dogecoin and are going after Bitcoin, then I think it just speaks to what really drives this. Like, does the loyalty lie? It's in the incentives, right? So it will be interesting to keep up with the story and see what happens. On the same similar path, right? In terms of just changing the trajectory of what happens with chains, you're starting to see more institutions that are diving into building out their own chains. And everyone's talking about what does this mean for Ethereum or other permissionless chains. And we've got two stories today to share about Stripe and Circle that are announcing that they are going to have their own chain. So
Yep.
Stripe's building out Tempo along with crypto VC Paradigm. And in terms of Circle, they have their chain, which is called Arc. And both are designed to essentially have this like seamless payment infrastructure. What are your thoughts on these two stories, Mike?
Yeah. So let's start with Stripe. Um, so yeah, like you mentioned, they partnered with Paradigm to build payments focused, EVM compatible L1 Tempo. And interestingly enough, the Paradigm co-founder Matt Huang is a CEO. Don't know if that is a permanent CEO or interim CEO before they find another one. But yeah, so Stripe, it aims to optimize cross-border payments and stablecoin transactions at scale. And Stripe has been going hard into crypto recently. They bought Bridge for $1 billion. They've recently bought Privy for wallet creation, crypto and login. So they are building out the entire stack. And what is extremely powerful here is like Stripe owns this massive distribution. They are integrated into every e-commerce website, and they've got this massive payments network. So it makes a lot of sense for them to own that stack, right? They can kind of control fees and have do proper compliance on the chain. So it makes a lot of sense for them to own that stack, right? Now now Arc, little bit different situation, right? Obviously USDC, 68 billion in circulation. They've done an amazing job to build a very compliant stablecoin. So now they're building their own L1. And again, it will also be EVM compatible, built specifically for the USDC will be the gas token, optimized for stablecoin payments. There's some foreign exchange. What's interesting in also there's opt-in privacy, which is super interesting. Um, but like the the interesting thing is like they don't have they're the issuer and they don't really own the distribution. They pay a ton of money to Coinbase for in their distribution partnership. I want to say something like 50% of their profit, something like that. I could be wrong there, but they're they're the issuer, and there are some arguments on like whether that is a good business or not. They don't pay out yield, and so there's a lot more here in terms of like to me there's a lot more doubt in the potential success of Arc. But there's also a lot of questions around, like you mentioned, how will this impact Ethereum? There's a lot of moving parts here.
Yeah, so let's dive into that. I mean, do you think that Arc and what Stripe is doing, do you think that this poses a threat to Ethereum?
I don't think Stripe is going to really pose. I don't. I can't give a definitive answer to that because um, I think that Stripe will kind of have its own ecosystem that's going to be very different than Ethereum. I think these are both going to be very different than Ethereum, but look, Stripe has its like Ethereum has done all this, has made all this progress, without you know Stripe really either having its own L1 or just like really even being active in crypto at all. So I think Stripe there's is going to be a little bit more of an indirect impact, but I don't think that's not really my uh I don't see that being a major issue for Ethereum. I think that they're going to be very very different.
I agree with you. I think that Ethereum, at the end of the day, it's still the settlement layer, and so institutions may be processing these transactions on these new chains, but ultimately, uh, the finality will be on Ethereum because of the trust, right? And it's the liquidity hub. That's where the trading happens, and also the credibility aspect of it, right? Because when you're looking for a public audit trail, you can't get it on a private chain, right? But you would be able to get it on Ethereum. So I think for those reasons, there's really not much to worry about there for me.
Yeah, I don't. So that's another thing. Kind of the questions about like how there were fewer details on tempo than there were in arc on like how how quote unquote permissioned is this going to be? Is it going to be fully permissionless? Yeah, what control are they? Is Stripe going to have over over tempo? So there aren't quite as many details that came out around that.
Yeah.
But yeah, I mean, so my what I'm thinking about is like, how is Circle going to get traction for Arc? Right, that's kind of my question because, and then your question about being a threat to Ethereum, like there's 68 billion of USDC in circulation. Over 42 billion of that is on Ethereum mainnet. Additional 7 billion on L2s like Base, Arbitrum, and other L2s, right? So there is actually a lot for Ethereum to lose. But like we talked about, Coinbase is a massive distributor of USDC, and there's Base has almost $4 billion of USDC on that chain. Like, is Coinbase? What role is Coinbase going to play? Are they going to support Base? Are they going to try to push Arc? I don't know. That remains to be seen. My initial thought that is they're not gonna sacrifice growth on Base for Circle's new chain, right? Um,
It's interesting,
yeah,
right? Like they had this like strong partnership. Now all of a sudden they've got two chains that are potentially competing against each other. It's
yeah,
interesting how times change. But in terms of Ethereum, you still have like the DeFi protocols, the exchanges, I don't know,
yeah,
NFT markets, DAOs. I mean, all those will still be living on Ethereum. So I think to your point, especially like on the stablecoin side, it could probably create a dent. But in terms of all the other stuff, I mean, I think that would still live on Ethereum. I don't anticipate them wanting to, switch over to Arc or to Stripe's chain just because of, these new chains.
yeah. No, I agree, right? And then you have to talk about, how's interoperability going to work? Yeah, yes, these are all EVM compatible. Are you going to now you're kind of forcing retail and institutions, all the users to port assets over. How do the bridges work behind the scenes? I mean, I think there's just this whole interoperability between L1s and L2s in the Ethereum EVM ecosystem. It's a problem that many teams are attacking. But also just like in terms of if you want to talk about like skill set and culture, like L1s and L2s are extremely difficult and expensive to run, right? You've got to recruit devs to build on it. You got to get the users, and there are many other not necessarily USDC focused, but other stablecoin focused chains, like we've talked about in the past. There's Plasma and Stable more for USDT, but like there's a lot of these other stablecoin focused chains and products coming up. Like, is this part of this kind of like native skill set of the current Circle team in this extremely competitive space?
Yeah, we talked about purpose-built chains, so we'll see exactly how purpose-built they'll be, or maybe they're trying to start with a specific niche and gradually they'll want to expand. We'll see what their plans are. But from what I saw on their page, they're already hiring positions for ARC. So if anybody out there is interested in working in Web3, they can go check out ARC. Next, Mike, let's talk about these three projects that are securing major funding. And hopefully they're in it for the right reasons. The technology seems promising, at least from that perspective. But let's talk about USD.AI. They
Yeah,
raised
keeping
13.4 million.
yeah, keeping on the stablecoin topic, USD.AI is a GPU-backed stablecoin lending protocol. They raised 13.4 million in a Series A led by Framework Ventures, and Dragonfly, Arbitrum Foundation, Flowdesk, and others also participated. So they allow AI companies to obtain loans using their GPU hardware as on-chain collateral. I think that is super innovative and very cool. And like, you've got all these AI companies that there's just arms race for GPUs, and that is having GPUs is a major asset, and being able to leverage that as collateral for decentralized stablecoin, I think is a really nice kind of intersection of a couple of very hot trends. Um, and I think this is a really interesting play in the stablecoin side.
A lot of stuff happening in stable coins and payments. And speaking of payments, Transak is on our list today as well. They're the payments infra for stablecoin and crypto. I'm seeing a trend here, Mike.
Yeah. So another big round, 16 million, led by IDG Capital and Tether, with participation from Primal Capital, 1KX, and others. A very comprehensive payments platform, fiat to crypto on ramp, real time liquidity routing, virtual bank accounts, all the compliance, all the bells and whistles there to make global payments easier. And again, I think with the Genius Act and all the activity around stable coins, Transact certainly taking advantage of this hot trend. They've processed more than 2 billion in transactions across both retail and institutional users. So obviously product market fit there, and leads to a big round to expand.
Last but not least, Mike, Holmes AI.
Yeah, I think this is another trend in AI. They're a persona powered decentralized AI agent platform. They raised 3 million in a seed plus round from Bitrise, Water Drip Capital, Hashkey, and CGV Fund. So their agents leverage personalized knowledge bases to deliver more human like and contextually aware AI assistance for various industries. I think this is what I truly believe what's going to happen is you've you've got these massive generalized LLMs that are good for retail, right? For the most part, we need to write up some content, or we need to brainstorm some ideas, or do some searches for some information. And the generalized ALMs are great to do that. ChatGPT, Claude, uh, um, Gemini, and everything, right? But especially for companies, you kind of want smaller, more we talk about purpose built a lot, right? Purpose built agents that leverage a smaller, more focused data set to train these agents on to execute certain, a smaller scope of tasks, but be able to do those uh, very well and very accurately. And then you kind of need under certain circumstances these to talk to each other. So I think this is what Holmes AI does. It allows they're smaller models that take the kind of more personalized, more customized knowledge to be able to do more specific tasks. And I think this is definitely the trend. And I'm seeing a lot of fundraisers around this. A lot of fundraisers around kind of multi-agent coordination mechanisms between these smaller agents. So yeah, I believe this is going to be the future in terms of having agents that are focused on specific tasks and do those smarter and better than the large LLMs.
Definitely a trend here with agents, AI, payments, stablecoin. People, this gives people an understanding of like what is the narrative currently. So for those that are watching, definitely make sure to subscribe to the Deep Ventures newsletter. Mike writes these up once a week, once a month.
Month.
once a month, right?
Yeah.
And also follow him because every week he will list out some of these projects that we go over here on this episode. So that I think that's about it, Mike. I think we covered it all
It was a lot.
from we covered
It
a
was a good
lot. We
week.
did. So
Yeah.
there's a little bit of uncertainty in the markets, clearly, but nothing to be alarmed about. At least not in the for the upcoming months. Things look promising.
Yeah, man. I mean, I'm always excited. There's always uh there's always gonna be, crazy shit happening in the world that impacts the markets. But I think there's your people still building, the market's still growing, adoption is at all time high, only getting growing faster and faster. So yeah, super excited.
Absolutely. I am excited as well. And for those that are watching, if you're excited about Web3 and crypto and you want to join these conversations, head on over to networkspotlight.io and apply to become a member. And if you found this video helpful, like it, subscribe to the channel, and we'll catch you all on the next one.
All right, everyone. See ya.
If you're a founder or operator in Web3 and want to connect with others like you, head on over to networkspotlight.io and apply to become a member. See you on the inside.